And the UK's largest retail bank, Lloyds, is set to cut 3,000 jobs and close 200 branches. Now, we're a bit confused about what's going on with Lloyds because we heard from the CEO, Antonio Horta Osorio, and he said, in direct quotes, following the EU referendum, the outlook for the UK economy is uncertain. And while the precise impact is dependent upon a number of factors, including EU negotiations and political and economic events, a deceleration of growth seems likely. So that would tend to suggest that it's as a result of Brexit. I've also been sent an email within the last few moments from Lloyds Banking Group saying, I just wanted to make it clear that the decision on branch closures was made pre the EU referendum vote and is due to changing customer behaviour and a greater uptake of digital services. So, is Brexit to blame for the job cuts or not? Joined by Sebastian Payne from the Financial Times. Hello to you, Sebastian. It's a little bit confusing, that, isn't it? The boss is saying one thing, the press team very keen to say something else. What's your take?
I think it's far too soon to say what the actual impacts of Brexit are going to be on the economy. That there was a lot of scare stories, a lot of fear-mongering from Remain campaigners before the referendum, and there was a few days of initial shock, but as we've seen, things have mostly calmed down since then in terms of the stock markets. The real test will come in October when we get those Q3 growth figures. The Q2 growth figures for this year had higher than expected 0.6% growth, and Philip Hammond, the Chancellor, said this showed the fundamentals of the British economy are strong. I think we're going to be tested to see how strong those fundamentals are when those figures come out. We've also got the Bank of England's decision. Are they going to cut interest rates? With regards to the Lloyds decision, you're completely right to say that, Kay, that a lot of this stuff was planned before, and it's to do with people doing more online banking, telephone banking, not going into their local branches, not using as much cash, and so it's obviously more efficiency. But those key words from the CEO there that they're expecting a slowdown, and if interest rates are cut, the sterling continues to be low, then that is clearly going to have an effect on Lloyds businesses, and they're trying to keep costs at a minimum. So I think it's a little bit of both here. So
this is one bank. I suppose we'll have a clearer idea when we see what the others are doing.
Exactly, I think that's the key. Banking is a very exposed sector here, particularly one like Lloyds. There's got a lot of UK-focused business, and don't forget, a good chunk of Lloyds is still owned by the British taxpayer as well, since it was bailed out after the financial crisis in 2008. So the thing about Brexit is it's not one individual thing. It's a build-up. It's what kind of idea are we getting? What's happening to inflation? What's happening to interest rates? What reaction are the banks are doing? On the other hand, we have seen some new investment that we saw. London City Airport's going to get a big expansion. McDonald's is investing in new jobs, and GlaxoSmithKline are as well. So it's not as if it's all bad news, but there are some very worrying indications about the future. So I think in a few months' time, then we'll actually know whether there has been a negative Brexit effect on the economy.
Okay, lots of people very animated on Twitter, as you can imagine.
For a change.
Yeah, just for a change. Maybe 80-20 saying that you can't blame Brexit. And they do have a point, because quite a few Lloyds branches closed before we knew what was happening as far as Brexit was concerned. But nevertheless, as you were saying, those words from the CEO would suggest, given a slowing down, we could find ourselves in a position where even more jobs are to be lost.
Exactly, and I think the thing is, when you look at one thing that's helped a lot stave off a recession, I think, is Theresa May's rapid ascension to Downing Street. This idea that we'd have a power vacuum, and the Chancellor, who wasn't really doing anything over the summer, did sort of give businesses more uncertainty. But now Theresa May and Philip Hammond are at the helm. That will tend to calm things down a bit, and it's just to see what those pictures come out there. And I think, as you said, there is likely to be more of this. There will be some businesses who will move jobs abroad in that uncertain period, but the longer these Brexit negotiations go on for, the more uncertainty we're going to have. But it also means businesses won't make lots of big decisions about whether to close down offices or move people to Frankfurt or what have you. So it's far too premature to say. You can't blame this Lloyds decision entirely on Brexit, but you can't discount the Brexit effect either, in my view.
What about weaker sterling? I heard a debate on the radio. I was coming in this morning, and they were saying, yeah, weaker sterling means that, of course, certainly as far as car manufacturing is concerned, that our exports are cheaper, so we can potentially sell more of them. But if we're buying stuff in from Europe, car parts in order to create these vehicles, then, that there is no net gain there.
Exactly. There's two views here. Some say that sterling has been overvalued and was due a devaluation, and people point to when we left the ERM in 1992, which then led to a long sustained period of growth after that initial hit of sterling being devalued. Other people raise the point you've exactly just made, that we obviously have a lot of imports into Britain, and by having sterling at a low price, that is going to affect. I've just come back from the United States, and I was amazed at how few dollars you now get for your pounds. So it's swings and roundabouts. It's too soon to say a clear picture of what Brexit is going to mean for the economy.
Oh, were you on holiday? Did you have a lovely time? I bet you did.
I wish I was at the Republican convention
okay.
covering it for my newspaper.
Oh, okay. Well, we're covering the Democratic convention, of course, here on Sky. And we'll hear Hillary Clinton a little bit later on this evening accepting the nomination. When do you think we will know the impact that Brexit is having in the UK? Will it not be until Article 50 is triggered, or will the uncertainty that continues mean that we'll have a clear idea, say, by the end of the year?
I think we'll know more by the end of the year about is the economy still growing? What's happening to construction? Has unemployment risen? So those will give us some indications, but you're right. The long-term picture, we really won't know until Article 50 is triggered and we know what kind of Brexit we're going to have. If it's a hard Brexit, i.e. leaving the customs union, leaving the single market, disconnecting ourselves from all European institutions, that's going to have a much bigger effect on the economy. And there's more international companies like car manufacturers who are going to be going to be likely to leave the country. But if we get some kind of deal where we are in the EEA, we're still in the single market, then I think that's going to dampen it somewhat, at least in terms of the pictures of banks and that sort of thing. But really, it is going to be several years' effect. The other thing not to discount is the Eurozone, that you've obviously got the Italian banking crisis, you've got the spectre of Greece on the horizon again as well. There's a lot of instability across the whole continent. How's that going to affect us? And how is that going to affect the rest of Europe as well? There's all these uncertainties. I wish I could sort of tell you more, but we're sort of in the dark here at the moment. No one really knows, and we can only begin to see once those hard figures come in and once the Brexit effect sort of begins to take hold.
Okay, thanks very much indeed. Great to talk to you. Come back soon. Thank you.